Hello, everybody. In this session, we are talking about commercial bank. Commercial bank is a bank that carries out business activities conventionally or based on syaria principles, which in its activities provide services in payment flow. And then we move to commercial bank business activities. First activity, collection of funds from the public in the form of deposit, demand deposit, time deposit, certificate of deposit, and other equivalent forms. And then second, placing funds in other banks, borrow funds from other banks, or lend funds to other banks, either by using a letter, telecommunication facilities, or by bankers' side draft, and then check or other means. And then third, issuing or implementing securities transactions for the benefit of banks or customers. And then fourth, distribution of funds in the form of credit or Sharia-based financing. And then fifth, conducting receivables transfers activities. And then we move to importance of commercial banks. Commercial banks are an important part of the economy. They not only provide consumers with an essential service, but also help create capital and liquidity in the market. Commercial banks ensure liquidity by taking the funds that their customers deposit in their accounts and lending them out to others. Commercial banks play a role in creation of credit, which leads to an increase in production, employment, and consumer spending, thereby boosting the economy. As such, these banks are heavily regulated by a central bank in their country. For instance, central banks impose reserve requirements on commercial banks. This means that banks are required to hold a certain percentage of their consumer deposits at the central bank as a cushion if the public rushes to withdraw funds. And then we move to functions of commercial bank. The first function, deposit acceptance. Deposit gathering is a necessary function of any commercial bank and is required to offer credit products and services at a lower cost than external financing. Gathering deposits is the key to generating an acceptable return on equity tied to the growth of a commercial bank's credit portfolio and interest income. And then, second function, agency and advisory. Commercial banks also offer many agencies and advisory functions due to their privileged position as financial intermediaries. Advisory services to manage risks from business to business activities, supporting trade credit with global entities participating in import and export, or documenting the performance of cross-border services are some examples in this category. And then the third, treasury and payments. To increase economies of scope and scale, as well as the share of wallet, commercial banks offer invoicing, collection, and also merchant solutions to support current assets. Expenses paid via check, charge and credit cards, and electronic payments are offerings that support current liability requirements. And then fourth, credit creation. Regulators set the minimum cash reserve commercial banks must hold to support its deposits liabilities. Excess deposits may be used to create credit to lend via commercial loans and other credit products, or lend to other institutions at the overnight rate. Credit creation is a critical function of a commercial bank. Interest is the highest percentage of revenue at commercial banks. Credit portfolio performance and health are widely monitored performance measures. And then we move to the role of commercial banks. The bank industry as a whole runs the economy of a nation. The roles of a commercial bank are: the first, they aid in the successful implementation of monetary policies. And then they ensure a superior level of data security for their clients. And then third, they boost the industrial sector by offering short, medium, and long-term finance. And then fourth, they adopt innovative ways to facilitate easy banking, automation, and artificial intelligence. And fifth, they accelerate trade by offering agency services, overdraft facilities, and other solutions to wholesale and retail businesses. And then we move to benefit of commercial banking for businesses. Business owners may experience a number of benefits by using a commercial bank for their financial service needs, such as the first, flexible financing terms. Commercial banks may offer flexible financing to meet the needs of businesses. Second, investment advice. For business owners interested in growing their company's assets, many commercial banks offer low-cost investment advice and services for clients. And then third, accessibility and online banking. Most commercial banks offer online and mobile access to accounts, loan funds, and other services that may make it easier for business owners to handle banking tasks and stay on top of their financial from wherever they are. I think it is enough for this session. Thanks for watching, and don't forget, give this channel with your like, comment, subscribe, and share. Thank you.